What's going on, guys? Tex here. Today is Wednesday, January 29, 2020. Thanks for joining me. So in today's video, I want to talk about a trade that I missed on Apple. Definitely got a little bit of FOMO going on. That's part of trading. You're always going to have FOMO. It gets a little easier over time. You just learn that there's no reason to feel FOMO because just because you miss one trade doesn't mean you're going to miss the next one. There's always opportunities out there. But in today's video, I want to talk about a setup that I spotted on Apple. I posted in the chat about it, but I did not execute because one very important piece of criteria was missing in order for me to get a valid signal to execute this trade. So with that said, let's jump into the video and discuss the setup. All right, guys, so we're looking at Apple here, and when we zoom out the chart, you can see Apple had a little bit of wild volatility. Their earnings came out yesterday after hours, so we had this big spike up in after hours, and then we pulled back. So I marked out some levels coming into today's open. Now, this pink line right here is marking the prior all-time high for Apple. I marked out the after hours high right here. Right here, I marked out our pre-market high. You can see we kind of gapped up in pre-market, gapped up over that prior all-time high, which is certainly notable. Traded up a little bit higher into a pre-market high here, pulled back, and then we dipped below that prior all-time high, coming back up. So we're trading up and over this prior all-time high. Definitely going to be a notable level coming into the open. And then I marked out this level here from after hours. You can see where we kind of pulled back from that spike high and caught support here, bounced up, and then closed in after hours right in this area. So kind of marked out three different levels from after hours and pre-market to pay attention to, as well as that prior all-time high. All right, so coming out of the open, I had one trade idea that was if Apple dipped into the prior all-time high and held that as support, I would definitely take a stab there, keeping the risk very tight. I wasn't going to give it much room because I realized it could make the run all the way down here to this the support level that we had coming in here from after hours. So that was a little bit far. If it broke, I would have just got out and then looked at getting back in if we made it all the way down there. The other plan was if we just ripped right out of the gate because the Apple earnings were good, definitely. So if we ripped right out of the gate and pulled back into this pre-market high and held it as support, I would definitely look at maybe taking along there. But in order for me to do that, I would need the pre-market high to hold. I wouldn't want price to dip below it because you've also got the VWAP coming up and over that pre-market high as well. So we got a pretty big pullback here. Not really the type of pullback that I'd like to see. I'd prefer to see a little bit more of a controlled pullback. And on this candle here, as it came into the pre-market high, I was watching it very closely, but I did not execute because it just didn't look like it was going to hold. And sure enough, it cracked. Came all the way down into low of day, perfect double bottom, and then bounced off of that into a lower high, and then kind of trended lower through the morning. Now the market started to pull back a little bit. QQQ, SPY was pulling back, so that definitely helped out Apple. But I noticed that Apple was there was a lot of orders going through. Of course, their earnings just came out yesterday, so there was a lot of volume being traded. But it was very light going down. When you look at the QQQ and the SPY charts in the morning when they were pulling back pretty decently, Apple was just kind of chopping lower. Now, the trend was clearly down, but it was chopping lower. It wasn't really selling off quite as hard as the market was. So I realized that if the market bounced, Apple had a really good chance of bouncing as well. So I saw Apple come down here into its prior all-time high. What really wasn't interested in taking a trade there because, again, the market still looked really weak. Kind of felt like Apple would probably sell off a little bit more. The first area that I was thinking Apple would catch support once that broke is down here. And then if it really fell apart, we had a chance to get a gap fade, a complete gap fade coming into the prior day's high or the prior day's close. Definitely would have been interested in a dip buy down here if Apple did that, but that would have been a long ways away. So like I said, first level of support I was thinking was that level from after hours that we marked here. You can see Apple started to come down there, but got bought up just before. Okay, so it didn't make it. All right. Now I watched it trade up and come down and put in a higher low right here. And I just decided, when Apple broke the pre-market high here, I was going to be very patient with it and let it go through its price discovery, which takes about 30 minutes. So you can see open here at 9:30. Here we are at 10 o'clock. So here's your first 30 minutes as it's going through its price discovery. And what we want to do is mark our trend so we can clearly see that we do have a short-term downtrend, at least at this point in time. So we're going to mark our trend line with our initial morning high and our very obvious lower high there. So as we're watching it right here coming close into the level that I was thinking we'd get to if we broke that prior all-time high, we didn't get there. We round up, we put in a higher low here. So I posted in chat that I was watching this trend here. I was watching for a potential reversal of this trend. All right, and so as we look at this, this is one of my favorite setups, basically a flag break long, breaking out of this short-term downtrend and looking for capturing a long trade on a reversal of the trend. Now, what we want to pay attention to is the break of trend. Usually when you get the break of trend, that's going to be your trigger to execute this trade. However, one of the most important criteria for me to execute a trade like this, especially with trading options, is to get that volume confirmation. So in other words, I want to see a noticeable increase in volume on that break of the trend. If I don't see that, then I'm not going to have the conviction that the trade is going to see the kind of continuation that I would need with options. All right, because again, when you buy options after the move is already going up, I'm buying calls and the move is already going up, I need that continuation. I need to ensure, I need conviction that that continuation is going to go higher, versus if you buy options into weakness, if you buy calls into weakness when something's selling off, you're going to get a much better price for it, but that involves buying into a level without waiting for confirmation. So this is one of my favorite trades. It works well with options, but again, one of the most important criteria, especially with options, is I need that volume confirmation in order for the trade to be triggered. So let me just zoom in so that we hide this opening volume bar, because it's always really high. So it's kind of hard to get a sense of the rest of them. Okay, there we go. All right, so as we see Apple coming down right here, this is where we, this is the candle where we break trend. You can clearly see we break trend. But what is the volume doing on that candle? And we can see right here is the volume on the break of trend. And you look at it surrounding, you look at it in comparison to the volume bars previous to that, and it's really not noticeably higher. It's about average, right? So for me to see just an average amount of volume traded on this break of trend does not give me the conviction that we're going to see a noticeable push higher. And that's especially important, again, with options. Volatility is really something that you want to see to get the best type of return and the best way to manage your risk, because you're going to get a dramatic move in the premiums. If you don't get that volatility that comes in, that you would obviously need an increase in volume, you would need buyers to really step in and start buying it up to get a volatile move up, then the risk is going to be greater because the premiums won't move as much. And if the trade doesn't work, then the premiums can drop dramatically on you. So it's one of those things that can be a little bit more difficult about options trading, and that's why this criteria is absolutely important for this type of setup. All right, so I saw it break the trend here, and I did not see the volume that I wanted, so I'm sitting tight. And I basically posted in chat as it was breaking here that we're breaking trend, but I don't like it. I don't see the volume confirmation coming through, so I'm sitting tight. Now on the next candle, we immediately just kind of start to peter out here. We're just kind of consolidating. And then the next candle, we pull back into the trend. All right, so this is actually a nice pullback into the trend, confirming trend support. It holds. And when we look at the volume on that candle, we notice that the volume is noticeably lower than the previous candles. So what this is telling me is that the sellers tried to bring it down, but they weren't able to gain control because of the clear lower volume on that candle, and then it bounces right back off the trend. So essentially the buyers stepped in right there and bought it up off the trend, more so than the sellers were able to sell it down below the trend. So right there, you could have taken an objective long. You definitely could have taken an objective long. Your risk would have been right under the trend. I would not want to see it get under that trend. If it gets under the trend, I'm out. I'm not going to give it down to low of day. I do not want to see that, especially with options. So that was an objective long there, but again, I didn't trust it because the market overall hadn't yet proven to me that it was truly going to bottom out and reverse. It still had potential to really come down lower. There were some key levels that I was looking at that we fell below. So kind of a combination of not having the confirmation in the volume here on Apple itself for this particular setup to give me the conviction to execute the trade, plus what I was seeing on the market, really caused me to express caution and just sit on the sideline, preserve capital, really exercise discipline. But in hindsight, it obviously worked out beautifully. We can see that it does grind up higher here. And you know, the other thing is that you've got the prior all-time high sitting here. Again, that was a level that was highly respected, as you can see. And that's a significant level. I mean, a prior all-time high is definitely a significant level to be aware of. And it's right there in the breakout zone, right? So as soon as we break out of this trend, you've got, boom, you've got that prior all-time high literally sitting right there. You've got the 50 EMA sitting right there as well. So I would definitely need to see that volume confirmation come in to expect that it's just going to get through those levels like they're not there. I don't need it to hesitate like it did here. I need that clear conviction that it's gonna squeeze higher, and I just didn't get it. So, you know, in hindsight, yes, it worked, but the trigger was not there for me to execute the trade, so I simply did not execute. Now, here's where we finally get the squeeze. We break up over that prior all-time high, and then we get this nice squeeze up and over the VWAP. And since then, Apple is now pushing, I believe, up to basically a double top right here. Yeah, perfect double top. Objective short right there actually, but I'm not going to be shorting something that had good earnings. It's just not something I do. So with that said, guys, I mean, yeah, it's one of those things that the trade worked, but especially with options, I have my criteria that have to be met, and they simply were not met. So I exercised discipline and followed my rules and did not execute the trade. I sat on the sidelines. So as being a trader, this is going to happen all the time. You just have to understand that you're not going to catch everything. Sometimes you will be right and you still miss a trade. And that can be really frustrating, but you really have to just realize it's not about being right. It's about really managing your risk and just following your rules and your criteria to the letter. Now, what I would also recommend you do, especially for cases like this, is that you journal these trades that you do miss. Edgewonk has a great feature to journal missed trades, but it doesn't matter what you use. Journal these particular trades that you missed because for whatever reason it didn't meet your criteria or whatever the case may be. Journal those trades, and then you can go back after you get enough data accumulated and you can look at, okay, if I had taken every single one of those trades, would I be profitable right now or would I have lost money? All right, and so then you can clearly help give you conviction in your own system and determine whether you need to modify your criteria because you're missing out on a lot of profitable trading, or if your criteria is actually really good and you're saving yourself money in the long run. So that's why in my system, this criteria has proven to be very effective. If I don't get that volume confirmation, more times than not, it will fail. It will not continue like this. Now, I think today was definitely helped out by the fact that Apple had a catalyst, a positive catalyst at that being good earnings. So there was also that to consider. But for me, it was just a no-go, a missed trade, and that will happen. That's just part of trading. So hopefully the video was helpful. Like I said, the biggest takeaway is always follow your criteria and your rules. It's just not worth it. If it's proven that it's going to cost you more money in the long run, then it's better to just stick with your criteria. Even if the trade might have worked, just learn to deal with the FOMO because it's never going to go away, but it will get easier over time. It will definitely get easier over time. All right, guys, I'm going to wrap it up there. I really appreciate you watching. As always, do me a favor. If you found the video helpful, you enjoyed it, please hit that like button. It always does help me out. And subscribe if you haven't already. All right, guys, take care, and I will catch you in the next video. See ya.